Hi, this is Roger Balzer. Welcome to our 2-Minute Tuesday for December 18th of 2019. Our title for this week is Panic. I've been fielding a few calls from clients who are in a panic mode due to the pullback we've been experiencing in the markets. I don't blame them for reacting this way. I do continue to think the secular bull market is alive and well. Again, I do continue to think the secular bull market that we are in is alive and well. However, over the past 2.5 months, Standard & Poor's 500 sure has not acted like it. In fact, for the historically strongest seasonal time of the year, usually October, November, and December, the Standard & Poor's has surrendered roughly 13% or so from our October 2nd intraday low of 2583. That action has elicited a few bear market calls from some of the pundits on the idiot box, that is, the TV. Take last Friday's Dow dive of some 497 points. The media tried to spin it that it was all about the slowing economy in China and Europe, as well as the problems with Theresa May's Brexit plan. However, I believe the real reason was the sealed grand jury hearing by Mueller. Something apparently big is happening with Mueller and Trump. Many think he may have some damaging evidence on the president, which could be revealed in the weeks ahead. Then there's a looming potential government shutdown that is worrisome for the markets, and our political leaders on both sides decided to put this on national TV with their petty arguments on both sides. The threat of a government shutdown at the end of December has created volatility in the markets, which I view as largely a negotiating tactic that should not elicit a market reaction if it becomes a reality. The debate comes down to the level of funding for President Trump's campaign promise of constructing a border wall. It's serving as a public test of the way he negotiates. Lack of a deal that leads to a shutdown would be a shutdown in name only, as much of the government's funding is already agreed upon. Trump's handling of this debate may be seen as an indicator of how high stakes negotiations with China are playing out, potentially adding to the sensitivity we've seen in the markets recently. Meanwhile, individual investors are not just cautious, they are downright scared. I've received many calls from my clients, as I said, and what I tell them is, as always, I have a process and I follow the charts. In last week's Association of Individual Investors numbers, it showed that bullishness fell by 17 points and bears leaped by 18 points to about 49%. This is the highest bear market reading since April of 2013. From those April 2013 lows, the Standard & Poor's rallied 39% into May of 2015. Additionally, the difference between the bulls and the bears is the widest that we have seen since February of 2016, which basically is where the second leg of this secular bull market began. If you recall, the second leg is always the longest and strongest and eventually leads to the third leg. The size of that third leg, let's take a look back in 1982 through the 2000 secular bull market, began in 1994 and lasted into the spring of 2000. Brings us to the here and now. The chart you're looking at right now is an updated chart of the Standard & Poor's 500. It's recently traced out what appears to be a triple bottom. What happens when this triple bottom is there? It resolves itself in one of two ways. Pretty self-explanatory. Either A, it continues on the downtrend, which would not be good. However, we have a long way to reach our support line, which is the dotted red line going across at the bottom, or it's going to give us a thrust back onto the upside. If we get a bullish triple bottom upside reversal, which I think is probably going to happen, we've got enough here for a decent rally. Worth noting is that the third year of the presidential cycle has been positive for the market in all but one instance over the past 8 decades. Turn off the TV, let's follow the process. It has worked for many years, and I hope and I believe it may continue to do so in the future. As always, if you have any questions, please reach out to me at 440-610-3012 or shoot me an email, roger@balzerwealth.com. Look forward to a happy holidays for everybody with all of their family members. Take care now.